Welcome back, and now we turn to our focus on metals and crude prices, and what a decline have we seen in this sector for this week. To discuss all of that, we are now joined by Kunal, Shah of Nirmal Commodities. Also joining us is Priyank Upadhyay of SSJ Finance. Gentlemen, hi, and thank you so much for joining us. Kunal, you go first. And 7% of a cut in crude oil prices in this week. We've turned negative for 2018. Is there any support, any floor in sight yet, or would you still expect some more decline?
I think for the timing, it seems to be a little overdone. We've seen recently US oil production have moved up to 10.25 million barrels. So the average of the 2017 was 9.3 million barrels. So suddenly spurt in production by 1.1 million barrels. So going forward also, the number is likely to be somewhere at 10.5 to 10.6 million barrels per day. So I think the broad call for the oil is 71, 72, Brent has peaked out, 65, 67, WTI has peaked out. And we are not going to see crude oil making new highs for the year. Even though the global growth remains strong, the probability for crude to move up exponentially remains very low. So I think from these levels, we won't recommend to go short. We are likely to see some bounce back. We are seeing some risk aversion in the global markets. So on account of that, WTI may test levels of 60 to 59.50. That's it for the time being. If you are short, if you're having short position, you should book profit at those levels, and perhaps you can go long for the bargain hunting.
Priyank, what is your sense? Have we made peak for 2018, or do you see some merit in all of those reports from global bankers where they expect the prices to go to 75, 82 by third quarter of this year?
See, the main factor to drive crude oil prices in near future would be the demand and the growth prospect around the world. I agree that there is a supply glut in the market, and US production at highs at 10.25 million barrels per day has increased. But over a period of time, I see 65, 66 what the initial resistance we have seen, and from there we have seen a correction. I feel 60, 59 could have a good support in the market, and ideally we should head higher towards bounce back rally, I can say, towards $63, $62 to start with. So once prices breaks out above 65, 66 convincingly, we can head to higher levels of around 70, 71.
All right, so some bargain buying perhaps can be seen at these levels. But yet another area has been the base metal prices, which also saw a decline in this week, anywhere between 3% to 5.5% on the higher side. All of these metals, which were making all-year highs, multi-year highs in the month of January, clearly have turned around in Feb. Kunal, anything that you're picking up here? Because, of course, China is headed for a Lunar New Year holidays, and before that, we do see market jittery. Is it just about that, or do you see more merit in this?
Well, two triggers. One, like you rightly pointed out, Chinese Lunar Year, so the traders unwind their position and go to the holiday. And another important reason is the kind of decline we've seen is because of China's property index have corrected by 5%. So with the ongoing pledge by the government that the leverage state-owned companies will definitely reduce their debt, is definitely raising some concerns in the property market, and hence we have seen some reasonable amount of correction. Going forward, we are not bearish on the complex. We are of the view that the global growth remains strong, and on account of that, metal prices should do well. So I think these are the corrections one should use as a good buying opportunity. So I think nickel around 820 looks very attractive to us to go long. It's trading at 830 right now, and one can go long and wait for the targets of 860 to 870 going forward. Even same copper looks very attractive. If copper prices declines to the levels of 432, 430, it again remains very attractive buy for the upside target of 450. And another metal we feel is looking very bullish going forward is lead. 160 good levels to go long in lead for the upside target of 168 to 69.
So Kunal is picking up nickel and lead as long positions there. Priyank, where do you see strength coming in? Where do you see stronger fundamentals? Are you coming out with some buy calls here as well?
See, across the base metal complex, we have seen a decent rally from 2017, and even that continued in 2018. And with a correction in prices, the longer term and the medium term trend still remains on the upside. I would term this as a short term correction. With a rise in dollar index in the last few trading sessions, we've seen a pressure on the commodity complex. But this correction, I guess, would be on the lower side, would get supported. If I talk about aluminium prices, aluminium would have a support of around 136, 135. So it's trading around 138, 139 currently. So holding 135, I feel we could head higher again towards 142, 144 mark. Again, zinc prices, we have seen a wonderful rally. It went to 230. Saw correction towards below 220. Right now the supports are in the range of around 212 to 210 on the downside, and coming to that supports, we could see a bounce higher again towards 225, the recent highs. Going to copper and nickel, these two counters also has been beaten down from approximately 900 prices. Nickel has trading around 830. The short-term supports for me would be around 800 and 780. 780 is a very, very strong support. So unless and until it doesn't close below that, the longer-term trend remains on the upside.
All right. So even as it has been a dismal week for base metal prices, both of our experts really are trying to cherry pick or bargain buy on the lower sides. The fundamentals, of course, on the longer side are still supportive. Another sector which actually did see some safe haven buying as the week began, but let go of that as we head towards the end of the week, is the precious metal space. Kunal, how do you look at the 1% decline in gold, a 5% of a downtick in silver for this week? And is there any hope as we head into the new week or the next quarter for that matter?
I think the longer-term fundamentals for the gold and silver remains very attractive. We are very bullish for the year 2018. But I think most of these gains are we are likely to see this kind of gains in the second half of the year rather than the first half. First half, also we are going to see some upside. I think it's very surprising in spite of the fact that the volatility in US global markets, equity markets have moved up drastically. There has been a correction. There has been a lot of concerns. And in spite of that, gold prices have declined. So the key victim here was the US job report that indicated that the US job growth remained very strong. So the likelihood of US real rates becoming positive have become reality, and because of that, gold and silver are not doing well. But I do not recommend to go short at these levels, even though it can slide down a bit further, a tad lower from here, but 37,500, 37,600, good levels to go long in silver. Even for that matter, gold looks very attractive at 29,700 to 29,800 to initial long position. So somewhere I think it should stabilize during next week and should gradually move up from these levels.
You know, buyers of gold also look at the Indian prices and they want to know what you could see as prices by the end of this year. So, Kunal, if you had to buy them today on the dips, what is your sense on where we could see the gold prices by Diwali or by the year end?
Yes, I do not expect gold prices to go below $1,220, $1,230 for the entire year, and I expect on the upside we are going to see gold for this year may test levels of $1,400 to $1,450. And for that same reason, silver also looks attractive and can test levels of $20 to $21 and $21.
All right, and before we let you go, Priyank, what is your sense? Are you picking anything between gold and silver, or would you like to go bullish on both of them on a longer term?
You see, from the longer term perspective, the trend remains on the upside. In spite of weakness around the globe in equity markets, gold hasn't performed. The main key reason is the expectation of the Fed rate hikes are limiting the upside in the market. But still, I feel 1,300, 1,280 on the short term are providing a good support to the market, and we could head higher again towards 1,350, 1,360 going forward.
All right, so we have bullish cues coming in for most of those commodities going forward. Of course, this week is nothing to write home about, but that is the view coming in from our experts that buying on these dips for a longer term perhaps is a bullish or proper strategy to go with. Priyank and Kunal, thank you so much for joining us and giving us your strategies. And with that, it's completely out of time on this edition of Commodity Champions. Stay tuned for more for CNBC TV18.